Sir Rajesh sir, welcome sir. Venu sir, welcome sir.
Hi.
Sir Venu sir. Rajesh sir.
Vishwas.
Sir. Good evening sir.
Vishwas.
Yes sir.
Good evening. Can we start?
Yes sir. Yes sir. I will start introduction part sir.
Yeah.
Yes sir. Thank you sir. Thank you very much sir. Good evening to all. Thank you everyone for joining us today's session. Let me know analysis of Delhi High Court judgment, RECKITT, BENCKISER and others versus UOI. This is Vishwas, digital marketing expert from RERA Consultants LLP. Let me take a privilege to welcome you all for the today's sessions on GST series for real estate. I am honored to welcome our speakers for the day, CA Venugopal sir, CA Rajesh sir, and CA Ashika madam. To start with, I am pleased to introduce our first speaker for the day, CA Venugopal sir. He is a founder partner in Venu and Vinay Chartered Accounts since 2002 with academic credentials, which includes securing All India 45th rank in CA final. He is also certified information system auditor. He has completed various other certification courses from ICI, namely DISA, course on business valuation, course on internal audit, course on fraud detections, and forensic accounting. He has also completed a one-year course from IIM on data analysis and business intelligence. He has authored various industry-specific handbooks on GST. He has contributed to the technical guide on GST audit released by ICAI, other publications materials. He conducted workshops on filing returns with ease use of automation. He has developed a lot of Excel-based free utilities on GSTs like JSON Reader, creating JSON files, GST Validator, composition versus regular benefits analysis, GST Impact Reader, real estate project, switch decision analysis, GST audit working paper, tool, and many more. He is a GST faculty for ICIA and conducted various workshops and webinars. His other areas of practice includes, apart from audits, he has hands-on coding in Visual Basics, .NET, Python. He also reviews database design. He conducted various workshops for corporates on use of technologies, improve efficiency at work using Excel, building automated reports from accounting and financial applications. He is the man behind the development and managing of cloud applications like TaxSmiles, Insta Financials, and others. Now, it's my privilege to introduce Our second speaker for the day, CA Rajesh sir, who is one of the top chartered account in practice. He is partner at Venu and Vinay Chartered Accounts and proprietor of RKTR and Co. He is practicing in the field of indirect taxes at Bengaluru from more than 20 years. He has authored number of books on GST, central excise, service tax, KVAT. As author, joint author, as well as assisting author. To name some of the books, handbooks on annual returns and GS audits, GST Radar Reckoner, GST Tariff, Practical Guide to Service Tax, Central Excise Made Simple, Central Excise Law and Procedures, and KVAT Audit Manual. He is also contributed for background materials on GST and UAE VAT published by ICAI. He has been training the professionals, students, industries, and departmental authorities in the field of indirect taxes and invitations from ICAI, ICSI, NACIN, Tax Department of State and Central, Educational Institutes, trade bodies, professional bodies, and many more. He also contributed for background materials on GST and UAE published by ICI. Thank you, sir. And now it's my honor to introduce our another speaker of the day, C. Ashika Madam. She is a senior manager, GST department in Venu and Vinay CFRM from January 2021. She became an associate member of ICIA in 2013. She joined as an consultant in GSAP and Co. in March 2014 and had a comprehensive exposure to the GST ranging from examination of taxability, compliance verification, education, and appeal and representation at all levels. She was a member of editorial board of GST monthly bulletin by name Tax Talk, which is read by almost 30,000 plus chartered accounts and others. Before I hand over the session to our speakers, I would like to announce our recent achievement. We have been awarded as Most Professional RERA Consultants from IIB Pride of India Award 2024. I am also proud to share you all that we are spreading our wing in Tamil Nadu by starting our new branch at Chennai. This achievement would have not been possible without you all. I wish to thank all our clients and well-wishers which has been made us to stand here today. Now, now for today session, our experts let us learn more about is anti-profiting applicable in real estate, how to compute anti-profiting benefits, for what projects this principle applicable, legal positions for those who either not done anti-profiteering computation or received by notice from NAA. Now I request our Venu sir to take from here. Thank you to everyone.
Thank you, Vishwas. Ashika, can you share the screen?
Vishwas, can you allow me to share the screen?
Vishwas, can you make Ashika ma'am as co-host? Yeah, so friends, as Ashika coming up and sharing the thing. So firstly, welcome you all for today's session, jointly hosted by RERA Consultants LLP, Opaza, Naredco in the knowledge sharing on the GST for the real estate. Today's topic is more to do with the Delhi High Court judgment on RECKITT, BENCKISER and others versus the Union of India, wherein the Delhi High Court has analyzed various principles of anti-profiteering. And one of the predominant principle of the anti-profiteering which has been spoken or brought out is whether these provisions which are there, are they valid, legally valid? The answer is yes, they are very legally valid, both the act, the rules and everything. Most of you might be thinking, This is a section 171 which got buried, and the time limit to take up any new thing also got over. Is it a worthwhile to learn this? Answer for my first answer would be, see, though no knowledge will go waste, more importantly, I don't want you to look at from that there will not be any more anti-profiteering things that would come up now. In fact, the notification 3/2019, which was issued by the CBIC, the principles have been well thought in the similar lines of anti-profiteering computation, while that is not an anti-profiteering provision. Some of you would have got notices from DGGJ or any other authority, either suo motu or complaint raised by any of the home buyer. Post which, for some of the matters, the anti-profiteering authority NA would have pronounced an order asking you to pay some money, or some of you have approached the High Court. Matters could be in various stages, various phases. But it's very important for us to understand that why these provisions would come up, and as a builder, what is that I should be keeping in my mind is what we are going to understand today. With this note, I request Ashika to start the session. And we have Rajesh sir, is an expert in litigation. Rajesh sir, any point whichever we are missing, please do add at that point. Yes, Ashika.
Surely, I'll do that.
So we will be covering the today's session in this 4 points. First, we will be discussing whether the anti-profiteering is applicable to real estate or not. If it is applicable, which project it is applicable, and how it is to be computed, and what would be the consequences of non-compliances. So starting with the first point, is anti-profiteering applicable or not? Before entering into whether the anti-profiteering is applicable or not, we have to first understand when it is applicable. It is applicable only in cases where there is a reduction in rate of tax, or where the benefit of input tax credit has been given, which was not there. So if there has been rate reduction or input tax credit availment, this provision is to make sure that those benefit is passed on to the ultimate customers, ultimate buyers, and it is not retained by the suppliers. To ensure this section has been implemented. Now, when we come to the real estate part, in this, first in relation to residential project. Now, if we will see the rates and the ITC benefit, which is applicable pre-GST and post-GST, you will notice in service tax, I have taken 15%, which was the highest rate applicable during the period. At that time, it was 15%. And from 1st July to 31st March, due to abatement, effective rate became 4.5% and no input tax credit was allowed. Now, if you will see pre-GST, 1st July 2017 to 31st March 2019, GST rate was 12 or 18. Based on affordable housing and non-affordable housing, we were allowed for land 1/3 abatement, effective rate becoming 8% or 12%. But when this rate was prescribed with this, the input tax credit, which was earlier not allowed in pre-GST regime, it has been allowed in input tax credit. In GST regime, credit has been allowed. So resulting in some benefit of input tax credit, which I have said in when the anti-profiteering section is applicable. Now from 1st March 2019, again the rate got changed, 1.5% and 7.5%, which was affordable housing and other than affordable housing. 1/3 abatement is still there, but effective GST rate became 1% or 5%, but with no ITC. So if you will notice that the anti-profiteering which operate is only for a period from 1st July 2017 to 31st March 2019. In this period, as ITC benefit was given, thereby the anti-profiteering mechanism became applicable for it. So due to this real estate industries are now required to follow anti-profiting and make sure they comply with it, as we will be discussing what will be the consequence for non-compliances. Similarly was the case with commercial project also. In service tax design, there was no differentiation between residential or commercial. Both were taxable at same rate, same abatement, effective rate making it to be 4.5% with no ITC. But in GST regime, both have been treated separately. When it comes to residential, they have provided a reduced rate with ITC benefit. And when it comes, even in GST, this has been divided into two periods. One is before your 1st April 2019 and one is after 1st April 2019. So before 1st April 2019, for residential project, there was ITC allowed, and after that it was disallowed with reduced rate. But when it comes to commercial project, there is no differentiation for both. In both the situation, it was 18% was the rate, but 1/3 land abatement was there, making effective rate of 12% with ITC benefit, which was earlier not there in pre-GST regime. Sir, you want to add something?
Nothing at this point.
So from this ITC benefit, you can understand due to which anti-profiteering section become applicable. Thereby, you have to make sure if any benefit you have arrived due to which your cost has got reduced of construction, then you have to make sure you pass on that benefit to your ultimate buyers or customer. Now, with this, which project it will be applicable? Now, we have covered different scenario. Scenario 1, there may be a case where construction started in pre-GST. Completion of the project also done in pre-GST. Payment also received in pre-GST. And as we discussed in service tax design, there was no ITC claim, so input tax credit availment will be no. Anti-profiteering will not be applicable. As you know, the GST has been introduced from 1st July 2017. Therefore, anti-profiting cannot be made applicable for pre-GST transactions. Then, so where the transaction has all together have happened in pre-GST regime, no anti-profiting impact to be taken. Second scenario, where construction started in pre-GST regime, but it's completed in GST regime. Payment received in GST regime. Now, if you will see, as construction started in pre-GST, at that time, while incurring construction cost, you won't be availing any ITC. But the moment you step into GST and you have incurred the construction part of the construction cost in GST regime, on that, you would have availed the ITC based on the GST introduction. Now, in this ITC, which you have availed is of two components. One is what the expenditure which has incurred during the period. On that, whatever expenditure you incurred GST paid, you are availed. Second is the part of transitional credit, means credit of stock line, which is you were supposed to use, which you are going to use for the purpose of construction. So over here, you have availed ITC on two things. One is transitional credit and one is which ITC availed during the period. So over here, you got the ITC benefit as the construction has been done under GST regime, part of it. Now over here in first scenario 2, we are assuming that payment has been received in GST regime. You have not received any payment prior to GST. It's all started with GST. Obviously, part of the input tax credit you have availed which relate to GST regime. Therefore, as you have got you have got ITC benefit, therefore anti-profiting will be applicable. Because due to ITC availment, your cost of construction would have got reduced, which at the initial of the project, when you will be estimating the cost of price which you are going to charge to your buyer, you have considered it as a part of cost and you have charged and collected from your buyer, therefore making anti-profiting applicability and making sure you pass on that benefit to your buyer. Third scenario, again, construction starting in pre-GST. completion happened in GST, but payment is received in pre-GST. Even though you receive the payment in pre-GST, but as the part of the construction has happened in GST, you have taken ITC benefit. Therefore, anti-profiting again will be applicable. So in cases where GST construction has come down to GST regime, during that 2 years gap, 1st July 2017 to 31st March 19, where ITC benefit was allowed, in those cases, you have to make sure you comply with this provision. Fourth scenario, where everything happened in GST, means construction also happened in GST, project also got completed in GST. But in this case, you have made the payment, means your buyer has made the payment after completion. Obviously, in this case also, you have availed the ITC. But the thing is that as the project started in the GST regime, so you yourself was aware of the fact that you are eligible for ITC. As you yourself aware of the fact you are aware of the ITC, obviously you will not form it part of your cost of construction. Your price will be based accordingly. Therefore, anti-profiting will not be applicable because the price which you have quoted, you must have considered ITC not as a cost of construction. Thereby, in this case, anti-profiting will not be applicable. So you want to add something?
I'll take up after your this one, Ashika.
Okay, sir.
Okay, Venu, I want to just add some little perspective to the participant. For the benefit of the participant, we should understand what is this anti-profit, because Ashika is explaining a situation in all this. Before getting into a situation, we should understand what is the intention and background for this anti-profiteering concept itself. Firstly, there was an apprehension that on introduction of a GST, there is going to be a benefit to the whoever the traders, manufacturers, etc., because there are some elements on which input tax rate was not eligible, which was becoming a cost, will be given as an input tax rate in the GST. Thereby, they will be benefited with that particular extra credits, which otherwise would have not been entitled for. So, in fact, in a VAT regime, the study was made. VAT regime, such provision was not there. VAT, when the sales tax to VAT, they converted the single point taxation to multi-point taxation, and they gave a benefit. So there was no such concept of anti-profiteering. So some reports and all said that the traders, the stakeholders, did not pass on the benefit. So there was an apprehension that with the introduction of GST, the cost or the pricing of the goods and services to the ultimate consumers are going to increase, because the intermittent players, the service providers, traders, manufacturers, will keep that benefit of additional thing and make a margin, additional margin, and they will not pass on to the customer. In order to protect the interest of consumers, very important to notice, this provision is a consumer protection oriented provision, nothing to do with the levy provision. So when we are reading this provision, we need to understand that this will not be interpreted like a general provision of levy, assessment, taxation. Rather, it will be viewed with much more weightage towards the benefit of the consumer against the traders and service providers or the manufacturers. So whenever the court views this provision, the little more tilt it will be towards the general public or the complainant rather than the complainantee, that is the on whom the complaint has been launched. So we need to understand this concept. In the real estate sector, definitely there is a presumption that there will be a reduction in the cost, everything remaining the same, because there are many elements which are not eligible either to as a credit will be eligible. Example, CST. for the interstate purchases. Credit was not available. For the dealers who were in the composition scheme, input tax credit was not eligible. So, like that, many of the elements which were earlier not eligible on introduction of GST, that benefit is being availed. So, there was a general statement given that benefit should be passed on to the customer in the reduction. We should understand that it is very easy for somebody to determine in an MRP based product that whether that benefit is passed on by reducing the MRP or not. But when somebody comes and negotiates a price afresh for the new buyer, how will that be incorporated? That is considered, not considered? This is a very difficult question. In fact, this scenario, whichever is there, can be whatever is in the table is different. I put it in a little different perspective. Firstly, an agreements and the pricing finalized before GST, and the agreements which were entered after GST. That makes more sense, because if the agreement is entered after GST, obviously all the factors would have been considered, should have been the presumption. Though that presumption is not directly said in this High Court, there is some inclination towards that which has to be driven further in the further cases to come. So, any agreement entered into and the price finalized pre-GST, obviously there's the element of benefit which should go to the customer or the consumer or the buyer, so-called buyer, in this process is the context in which somebody has to see this. Now, there are many builders, developers, where the buyers filed a complaint, and all those cases went to courts, and the courts have dealt how they have not given any. In fact, the challenge is proud itself. How can the law be like this? Presently, High Court has turned on all those challenges. Venu will tell that little more detail. So I'm just telling now, in that context, in the process of telling, they have said that maybe this aspect there's no dispute. Other aspects will have to take care. So in that context, participants may have to understand this. Why and how we need to see these examples. Okay, I think hopefully Ashika will continue with the further points. Thank you.
Yeah, thank you, sir. Ashika, before you get into the methodology of NA computation, I would like to again give some preface to the discussion what Rajesh sir has given. Let me share my presentation. Vishwas, can you enable me to share the presentation?
Sir?
Can you make me as a co-host so that I can share the screen?
Yes, sir. Host.
I'll just enable screen share. Yeah, so till that comes up, so members, I would like really to think from the shoes of the government, all right? As Rajesh sir rightly pointed out, that when VAT was introduced, we had no provisions of section 171 equivalent. And what happened, because these provisions equivalent were missing, people take undue advantage of not passing on the credit. The benefit which Ashika was mentioning was specifically on there is been a reduction in the rate of tax, especially after the 22nd GST Council meeting, right? Where you saw a host of notifications that came in. This was a new law at that point in time. And there was a migration from VAT, excise, service tax, 3 elements. There was no cross benefit of VAT and service tax benefit. Rates, there are some states having VAT at the rate of 14.5%, 15%. Excise was already there at 12%. The excise benefit was not coming to the traders. So predominantly the effective rate to the end customer was 22.5%. With GST coming in, most of the rates were commodities were at 18%. And after 22nd council meeting, where the rationalization happened, many things became to 12 and 5%. And that's where the NAA, the national authority which has been set up to look after the anti-profiteering aspects, they have jumped in and looked at various commodities, predominantly two sectors, sector 1 FMCG, sector 2 real estate. While the two aspects which everyone have to put attention to, the aspect 1 was on reduction of rate. So there is one aspect where there is a reduction of rate. Then there is another aspect where the benefit of input tax credit. Earlier, the real estate sector was not subjected to the benefit of input tax credit. While you have seen the rates of taxes which Ashika has given with ITC, without ITC, pre-GST, post-GST regime. Now, these matters have been examined, and many big builders or builders where the notice was given, most of them have received the complaints. And matters were held. Most matters that went to NAA has been upheld, and they said that there is a liability to be passed on, and it came. Again, Rajesh sir explained these matters went to High Court. Principally in High Court, what was challenged was, is this 171 provision which is there in the law, is it valid? Read with 171, we have rule 122 to 134. Are these rules valid? And another bigger important question is the formula which has been adopted by NAA, was it valid? Because there was a standard situation that everyone has been determined to pay the taxes on some guidelines, and the guidelines they have adopted is how much of the amount money has been paid by the buyer till the GST period and how much more he has to pay, right? So if at all these provisions are valid, where were the guidelines that are issued? There were no guidelines which were issued by NA. So that was the discussion point. Now, the words which are there in the 171, where you are asking you to commensurately reduce the prices so that there is no profiteering. And what is this commensurate is also not defined, because the prices of the goods are also escalating time to time. Now, earlier, if my base cost was 150 rupees post GST, assuming my supplier has increased and my base cost itself became 155 rupees. So do I need to do computation on only the tax portion or the incremental tax portion? Even this was not taken. And these are the principles with which the matter went further. And once the matter has been discussed, and this is the case which I'll explain in a while, but we are here in 2024. We are here in 2024, and the status, there are definitely no new cases that will come. Of course, there are no new cases that will come, but 45th Council meeting has taken a decision saying that, okay, the time limit to handle the anti-profiteering cases from the NAA has anyhow lapsed, and there is a separate body, the Competition Commission of India, CCI, which has been established in 2003. This body has been handed over all the proceedings, saying that, okay, you take over the matters of NA, which were erstwhile, which are there, and the new matters that are going to come up. So even today, someone can put a case for anti-profiteering benefit that is not done. It's just that you will not go and pray in front of NAA. You will make a complaint to Competition Commission of India. There's a website they have formed. You will go there and pray. What is that you are praying for? You are praying for the benefit which has not been passed on by the builder. Now, what is in it for you as a builder you should be looking for? You as a builder, you will be in two situations. I'll say three situations. Situation one, you have already been subjected to NAA audit. Situation two, you haven't been subjected to NAA audit, but the points relating to transition credit that you have availed has been taken up in the audit either in 2017-18 or in 2020-21 when the TRAN was opened and you were asked to enter the TRAN credit, either of these two periods. The situation 3 is this transition that has happened 1st April 2019, thinking that, okay, there are any credits that needs to be passed on, the answer is no. As I said, the April, the 3/2000 central tax rate notification is more to do with the principles of the anti-profiteering, but these are not anti-profiteering measures. Now, for the anti-profiteering notices that you can get today, definitely there will not be any notice by NIA. It, as I said, it will definitely with the Competition Commission of India is where you will be subjected to. Now, while discussing the case, the department, before I will again hand over for the computation, the court has broadly made a summary of where the computation has to happen for the builders. Now, these have been subjected and put into 4 different scenarios, 4 different methods or 4 different scenarios. The scenarios could be, I as a customer would have entered into a contract with the builder prior to GST and the construction would have started prior to the GST. First one, both prior to the GST. The third element is the completion also prior to the GST. Now, with these 3 things, my contract and the payments thereon, the builder work status, these are the elements to be considered for whether an anti-profiteering applies or not apply. Today, why are we discussing? Even today, someone can raise a complaint against a builder, that is permitted, but the builders have to look into that for what projects even today someone can go. And more importantly, who is the authority who will decide? Can a CGST, SGST proper officer can take up a case against you? The answer is no. Another point which I will again want to highlight, which Rajesh sir mentioned, is what is the purpose of all this behind is they are eventually looking at protecting the consumers. Now, when they say protecting the consumers, look at the simple example that has happened. The rate of tax earlier was 12% effectively, 18% with 1/3 abatement, 12%, which has now become effectively 5%. The gap, which was, what was the gap? 12% was with ITC, 5% was without ITC. Now, what did the government do? Though I said this is not an anti-profiteering measure, what did the government do? Why did this change that came in? With 12%, even builder was getting input tax credit. So the effective rate of tax was also coming to that 5% in cash by the builder. So look at from the sentiment from the end customer. We all know Schedule 3, Entry 5. If you are buying a property after completion of the full completion of the property, there is no GST. So why would a customer want to pay GST, book a flat before? And after OC, it is more ready to move in project. COVID periods were also around. There's a lot of inventory that's been lying. So people always wants to be careful that, okay, if I'm moving into a project, let me move into a completed project. Thanks to RERA, earlier there were projects always used to be indifferent. Builder used to take an advance and never used to complete it on time. That was a complaint against the builder. Builders were also having an opportunity to invest into multiple projects. With the RERA, every builder, or 90%, I will say, the builders are genuine and compliant. They are ensuring everything is done. So this move of 12% to 5% also facilitated the builders to start selling the inventory fast, because customer will still feel that I am not paying 12%. I will wait till the OC is completed. And the builders are also going to increase the price after the OC. Before the OC, the price is definitely going to be lower. So considering the beneficial move to the customers, this rate has been reduced. Same lines, the anti-profit ring is when the GST is introduced, I am expected they reduce the rate because earlier credit was not there. So the court made a lot of observations with regards to the construction, and they said it cannot be a straitjacket one formula, but the benefit has to be given basis the square feet area of the flat buyer. Just because before July 2017, someone has paid 70%, another person has paid 30%, there cannot be a different anti-profit ring credit that will move on, because the amounts paid under GST is a little different. So they have taken a view saying that the eligibility is purely based on the nature of construction activity that has been undertaken during the period. So pre-GST, without GST, post-GST with the GST. The advance receipts were definitely not uniform on the life cycle of the project, but the calculation has to be purely with regards to the GST savings, which has happened. Now, here is where the wordings, the commensurate that came in, which Ashika will talk about during the computation methodology, is to really look at the price of the product. There should always be a price sensitive. In fact, the 4 scenarios which I was saying, the one scenario is completely pre-GST construction. Flat also completed, the construction is completed before GST. Now, buyer has taken it upfront by making the payment before GST. Anything anti-profit ring comes in? No. Some units not sold before GST, now getting sold in GST. Any benefit? Absolutely no. Everything is done. There is no benefit that would accrue. But there will be a benefit that would accrue if a project has started before GST but completed post GST. Buyer could have made a payment upfront full, or buyer is making payment upfront after. Now there is a price reduction, that the benefit that has come in. This is the benefit which the government is looking at, which needs to be passed on to the respective flats. And it is not qua payment, it is qua the percentage of the work that is completed. The issue also came up that if I have entered into a contract for a project which has started before GST, which has been started before GST, and it has been purchased post GST. Construction is pre and post. The payment, okay, if it is payment is before GST, the benefit has to be given. If the payment itself is post GST, is like the contract itself is entered post GST, then there will not be any benefit that would accrue, because the price which is bargained by the buyer and the builder is after taking into the effect of the GST. Here is where you need to be now looking at, if you are going to get any notices, or if you have any notices or any orders, classify these orders against what are all those principles. I'm sure most of you would have approached if the order was skewed to the High Court, or if a new a penalty proceedings that is invoked, or information has been called for by CCI. You can actually look at the contract, segregate into this manner, and look at, should at all there be any anti-profit ring in your case, and does it need to go into the merits of looking at the applicability of the anti-profit ring, is something that you should look at it. Because the formula which is applicable in an MRP plus taxes cannot be applied to the same scenario of the real estate. No one formula can fit all the cases. That is something one should definitely look in, and that is where the the 3/2019, the ITC reversal, no, the crux of the whole notification, which is on ITC reversal, no, is well thought so that these issues will not repeat or should not repeat has been looked at. Now, that is something which will definitely be has to looked into, and everyone has to appreciate the computation mechanism of the pre-GST, post-GST methodology adopted by NIA. Briefly, I'll request Ashika to explain that before we wind up the how you should be again be careful. Ashika? Okay, let me take it up, no problem.
Sir?
Ashika, you're there?
Yeah,
Okay.
Yes.
Okay. All right. So now the methodology which has been adopted is the ratio of the input tax credit to the turnover under pre-GST and post-GST. Question that is it 100% correct, not correct, is something we have to look at this way. Let's say if I am buying steel at 150 rupees plus VAT. What was also there in earlier GST, this steel had suffered excess duty. So eliminate, maybe this trade, the builder has not directly purchased from either the manufacturer or anything. There is no excess credits which have been passed on second dealer, third dealer. So compute excess duty, compute the VAT rate. This was the tax that was suffered and there was no benefit. Why no benefit? Predominant of the builders were under the old method. People might also consider that they are under old method, could also be one other option. Comparing that only with the rate that is now available with GST is not at all the correct ratio, because there also has to be a correlation between the turnover and the input tax credit. The turnover is offered to the tax basis the receipt. Just because I have received all the monies and offered to the tax, saying that no anti-profiting is also wrong. So what is the right method to do? The right method to do is looking at the savings on account of GST introduction, and this savings have to be looked into project wise. Firstly, the entire credits have to be split into project wise. Now, if you are looking at the anti-profiting provisions, how you will be looking at the law also started looking at in the same way. Standing in February 24, what is that you should do? For a moment, I'll consider that there are no anti-profiting provisions are applicable to you. Nothing has come and you're fresh. What is that you can consider and look at it? These are the same costing principles, or the standard costing, marginal costing that we read are the same principles. Currently, assuming you are a builder having some 6 projects parallelly going on, you will have customers who would want to swap from one project to another project, who would want to swap. While the swap is happening, it could be one company to another company. The ratio that you will be adopting in terms of swapping, first and foremost, is the principles of market demand and the supply availability. But how do GST comes in a play? While GST has definitely no input tax credit with 5% flat rate being there, you would be looking at what is your cost, GST cost. The GST cost is all purchase cost, including the development rate cost. Now, standard material cost between project 1 project is also the same. So if there is a price differentiation you are applying, it is a differentiation which is on account of the land that is there, right? So when a person is switching from one project to another project, you are looking at the costing principles to say what is the price at which you will want to upgrade him, because you are in the same quality of construction will be the same whether you are doing in place 1 or place 2. The price that will only can change is purely the land that is there or the opportunities that is there in the other things. If we keep that principle as the base, when there is a migration that has happened from pre-GST to GST, so the payment, the change in the payment terms will not determine the quantum of the benefit that one will be getting. The quantum of the benefit one will be getting is the work which is done and yet to be done is what one will be getting. Similarly, you will also have to apply the same formula if you have any case that will be coming in front of the CCA, or if you have something to deal with the new people who are coming on, you should be looking at it. Another point is, while you are applying the principles of benefits that needs to be passed on, these principles have to be considered not just alone at the tax, it should also be with the cost. Prior to introduction of GST, if that 150 rupees per basis of the steel, if it has instead of 155, it had become 148, there was a 2 rupees reduction in the base. This 2 rupees reduction in the base would also be passed on to the customers. While if you notice a diesel which you purchase here in Karnataka, Bangalore is 87 versus a diesel which you purchase a little later could be some 95 X rupees. There are other logistics costs which the people plan it. There are local taxes which the people plan it. Considering putting all the margin, there's a price that comes in. Again, here, the benefit that needs to be passed on is looking at the revised price. So, your cost sheet in your books of accounts, even though the input tax credit is not available, you also needs to factor in while you are accounting for what is your base cost, what is the loaded GST on it. Sometimes you will also get the benefit of the purchases whenever you do a trade purchase, like when you do so much in bulk, you will get a price at a different price compared to a price. So just for the sake of showing a bill, I can go to a market, buy 100 bags of cement from 3 different vendors on a single date. Price more or less is same with some 50 paise 1 rupee difference. Saying that this is my purchase bill, vis-a-vis I am buying say like 1 metric ton of cement for this whole project, and the rate I have negotiated for 1 metric ton would at least be some 70 to 100 rupees difference from that rate, right? So that is the rate that you need to compare while you are comparing and putting into the accounting. So while you are doing the accounting in your books of accounts as a finance professionals, you should also include the benefit that you are deriving by way of having the additional materials, free materials, or the bulk purchases. When you have all these things, these factors should also be included in your accounting, because you will be called for these documents asking what is your current cost or the cost of doing this. Especially when you have multiple projects, you will have to split it. It's, in fact, the best person who doesn't need to answer doesn't maintain books of accounts is willing to go through the hurdle of that. But isn't that definitely not a right practice? But the best practice or right practice is try getting this accounting at the project wise and at a comparable price. In fact, when I say the next slide, yeah, when we say the comparable thing, look at everything. The additional material, free material, you are getting the bulk discount, all those things, cross subsidization. You have a project manager, a salary debited in one entity or one project, but the people working in another project. Now, you got to make all of that, because when things are not available, assumptions would be made on. Now, when an assumption is made on, then there is no limit. Anything can be assumed. But when you split and account it at a project rationalized rate, everything would be available. What cannot be induced? Let's say the CFO sitting here, I am apportioning his salary on all the things. See, certain things are done at one level of rational, but I maintain nothing, then it moves to a kind of a whole new scenario. So just to summarize, the decision which has come in the recent Delhi High Court, it is not the end. Okay. The RECKITT BENCKISER is the one of the applicants. I think there are around 180 different applicants. All the others heard by the union just to say that, hey, 171 is valid. Now, do not come to me saying that anti-profiting, is it valid or not? It's perfectly valid, both rules, act and everything. Methodology, I agree there has been some issue. Let those matters on methodology, the way the pronouncement happened, let that be heard separate. That is not clubbed with this decision. That decision hasn't even come yet. What is now held is, yes, it is valid. Please go ahead and pay the pass on the benefit. So some of you who have not provided for the books, who went to High Court appeal, you still have to fight and wait for your case. But you have now an opportunity to present and represent the case as to what is the right quantum of the benefit that needs to be passed on. However, if you think that you got a judgment which is giving you a lower benefit, you can still be silent with it. I don't know whether it can be revised, like issuing a DRC 08, which we have been seeing. Will it happen in the same way? I don't think that will happen. But let's wait and see. Anything with the court, anything could be possible, because they go by principles of natural justice. They want to give the best possible judgment to the customers. So we will have to abide by the High Court judgment if something comes over and above whatever the computation that has already happened. Right? These are the points you have to be mindful of. And if you're not complying with any of these provisions, firstly, you have to keep paying interest. And if the government feels that, okay, this money, the customer is not there. Let's say I have sold my unit, which I have procured after GST. Now the benefit has to be passed on, and I am not there. The unit is now held by a third party. This money will still go to consumer welfare fund, and nothing will be left back with the builder. Any fixed time to provide the benefit? As long as the benefit exists, the benefit needs to be passed on. This is what the provisions are looking for. While, yeah, these are the things that we need to address. Rajesh sir, anything else we need to say before we conclude?
I think nothing more. I wanted to just bring in a couple of thought processes into the questions which have been raised. One, whether the inter-customer adjustment is permissible. That means while computing the thing, project-wise, overall, there may be whatever it is, but individually it should be computed on a square feet basis. And one case I have passed on more, one case I have not passed on, one case the inter-adjustment is it permissible. Point number one. Point number two, say a project is started in 2016. Now going on till 22. Now there was a thing which was I'm supposed to have passed on for a period up to April 19, where I was eligible for credit. After I didn't opt for this continuing project scheme, I went for the 5% scheme, where all the taxes paid is going to add to the cost. So there is a profit on there may be benefit on the period from July to 19, but from 19 to 20, it is negative. In fact, the benefit, at least there is some credit in the pre-GST regime, that also is not available in the after 19. So I can offset between the two and finally compute at the end of that particular on the completion date. And till when this has to go on, all these questions are unanswered, not knowing till the courts have to come out and decide and tell what it should happen. Again, I was going to understand already the matter has reached to Supreme Court, and the Supreme Court has asked them to issue a notice on the other side. And this is still a long run process. And by the time all this decision comes, I think the customs would have forgotten the thing. Only whoever is stuck is stuck, but whoever has not been put up with any case, they have not been put up. And also, for a project that is completed in 1819, today can somebody go and file a complaint? Whether the general period of limitation will apply? All these questions are open. So, is it going to be long drawn? To when? How? Because if this anti-profit is applicable for one builder, obviously it's applicable for all builders. So, only in some cases where it has been somebody has put a complaint is only suffering. The other builders who have not been put a case against is not suffering. So is it not inequality? So I think these are some questions which come in mind, but there are no specific answers to this. Okay, right.
Yeah.
Sir, I have certain questions. Can I ask, please? My name is Mitesh Kulkarni, sir.
Yes, Mitesh, sir.
Thank you. Venugopal ji, I heard you in Hyderabad from the time you addressed for the TOI 5 years back. And it is always a pleasure to hear you. Thank you so much.
Yeah.
I'll just turn on the video. Okay. Okay. So there are, sir, 2 or 3 questions I have.
Yeah.
One, we have a project which is having about 8 towers actually. And this project, JDA was signed in 2014. Area allocation was also executed in 2014.
Okay.
Okay, both JDA and area allocation was executed in 2014. Project is having, sir, about 8 towers.
Yeah.
Now, first 2 towers were in the service tax regime, started in service tax, handed over in service tax before July 2017.
Right.
Now, from 1st July 2017 to 31st March 2019, about 2 towers were started and delivered. 2 towers, sir.
Got it.
And we are in the 12% scheme, which we continued ahead.
Right.
Naturally, the entire project of 6 towers has a common GST number. Naturally,
Correct.
Common GST number. Now, I have 2 or 3 questions, sir. 2 questions on this, and then another question. One question is it required to share the input tax credit with the landlord? This is under joint development nature. And if so, is it only for the period 1st July 2017 construction to 31st March 2019? Can that be correct assumption, sir?
All right. Sir, if I understand the question, just for by benefit, the project started in 2014 and 2 towers started completed in service tax era and 2 towers partly in service tax, partly GST, then rest of the towers in GST period.
Correct, sir.
Now the question you have is the input tax credit benefit, should it be passed on to the landowner?
Correct.
Right. Okay. Sir, there cannot be first straight jacket again answer to it. It depends on your positions that you are taking. There are various elements of levy in GST between the landowner and developer. He is providing you development right and you are providing him construction services.
That's true.
Now, these construction services, when you are providing, the question that could be, landowner can be paying you consideration separately towards the tax element, whether I'll say GST, or landowner can be saying that it's all forming part of the sharing agreement that has undertaken.
Second one, sir.
Irrespective of it, you as a developer, when you are providing services to the landowner, the benefit of the input tax credit has to be passed on to a registered landowner. If he is registered, you are necessarily to pass on the benefit of the input tax credit. Now it is up to him whether he will use this as a benefit to do the trading of the product and sell the units before OC, utilize, not utilize. It is the position left to him. But the responsible supplier, coming to Rule 46, mandated upon you to pass on the input tax credit to him by way of charging tax in the invoice. Now, when the tax on the invoice is being charged to him, which is an agreed price, now there comes in the commercial discussion whether the quantum of input tax credit is inside the base price or the input tax credit is vis-a-vis exactly matching in the invoice. Again, this is a commercial discussion which has got nothing to do with GST. All that GST would say is you are a B2 registered, he would be a registered or registered, pass on the taxes. Now, what taxes? Is it the input tax credit which you have? Is that the one or the other? You have to pass it on. Will 171 be applicable to this transaction? Answer is yes. Because of GST, you got a benefit. The benefit that you need to pass on is this. Thankfully, with the knowledge that I have only seen complaints that have gone from the end customers to NAA. I haven't seen a complaint where landowner has requested for change in the sharing ratio. As far as I know, I don't know, but Rajesh sir can add it for the 171 case. Answer is the benefit has to be passed on the transition.
Okay, sir, then is it only for those 2 towers which are in
I
that-
think, Venu, I want to just add
Yeah.
one
Yes,
point.
Yeah.
Okay. Sir, there is a relationship as to the pricing, whether benefit has to be passed on to the landowner was your first question. Okay. There is no specific mention in the provision that it has to apply to whom or between whom.
Okay.
Going by the concept, once somebody is treated as a supplier, another person is a recipient of that supply, irrespective of the consideration being in a non-monetary terms. Okay. And already our terms are agreed earlier. In my understanding, even in the case of landowner, that benefit has to be passed on. It cannot be kept within. But as Venu did mention, there's no complaint per se which has gone to the NA, to my knowledge also. But one more point which generally comes practically in these scenarios are when the developer goes to the landowner and says, boss, you're liable to pay GST additionally after the introduction of GST. Because earlier we had talked about the service tax or whatever the things were silent. So now the GST has come. You have to pay me that additional amount as GST towards the area which I am constructing and giving it to you. There, at least the landowners are their consultants or they themselves are asking, okay, fine, you're asking me to pay, but you reduce the benefit of input tax credit, which you got, otherwise which you would have not got in the pre-GST regime. And you only demand a differential tax. You can't demand a full amount of the GST from me. So this is the claim which is being put across, validly put across in my view, from the landowner to the developer. Now the question would come, will in this case, your contract act will prevail?
Yes.
Or the special act will prevail? Answer is the special act will prevail, but the enforcement is not through civil code. The enforcement is through only the special mechanism built in the law. So they cannot take this court to arbitration or the applying 161 again. In arbitration and the civil court, they may still apply 171 and try to extend that benefit in arbitration. Many cases would have gone for arbitration in this era, where the builders and the landowners are concerned. So there, this question will definitely come. 171, in my view, would equally apply for a transaction between a developer and the landowners.
Okay. So, sir, this is then applicable only for 2 towers because 2 towers were done in GST regime, or will it be all 6 towers?
I think I would have missed the complete facts when you explained. Sir, this would be applicable to all the 6 towers, not the 2 towers completed in service tax is not applicable. That is why I have given you the 4 scenarios which the High Court has given the judgment. Any contract you entered prior GST, contract completed, no issue. Any contract you started after GST, again, no issue because you have discussed. But a contract started prior GST but completed in GST is where this would come in. So all the 6 towers will come up.
So that rule of 1st July 2017 and 31st March 2019 will not apply here, is it?
Which rules are which rule you are saying?
In the table you are given, no? 1st July 2017 up to 31st March 2019. That is for customers also. So wouldn't that not apply to landlord also? That's my question.
It is applicable to landlord also is what I'm saying.
So only for 2 towers then, sir, as I said, my specific case, 2 towers are in service tax. 2 towers were done between 1st July 2017 to 31st March 2019.
Okay.
Another 4 towers are done after 1st April 2019.
Yeah, so that is where Rajesh sir mentioned this 4 towers issue is little silent because owing to 3/2019, the builder has relinquished all the input tax credit. So the question on input tax benefit pass on will not arise. Only the reduction in the price can come in, which will be difficult to say. So to give you a practical answer, the 2 towers which are there up to April 19 would only be subjected for the benefit to landlord.
Sir, and kindly remember, my 12% is continuing. For all 6 towers, 12% is continuing. I did not go to 5% from 1st April 2019.
Oh, okay. Then all the 6 towers you should be subjected to input tax credit benefits.
I see. Okay.
Yeah.
And so if it is seconds are coming to the customers, for the customers, then only those 2 towers which are between 1st July 2017 and
I'll not put that way. No, I'll only say the contract date.
Okay.
The contracts that have commenced prior to the GST and where your construction is happening in GST. Those are the one which is applicable. It is not all the customers.
Understood. I got the point. Sir, last question is regarding redevelopment projects in Maharashtra. Now, this judgment has come of the Telangana High Court recently, by which the Telangana High Court has confirmed that the GST on development rights.
Correct.
So far discussing was GST on construction services, sir.
Yeah.
This is GST on development rights. Suppose this is confirmed, for example, this judgment.
That's confirmed, yeah.
That's confirmed. So then if it is confirmed, then what happens to redevelopment projects in Maharashtra? Because we are doing there also. So there are cooperative societies, sir, as you know, in Maharashtra. So they are going to give the development rights to the builder.
Right.
In such a case, the onus of paying GST on development rights, is it with the cooperative society or with the builder? On development rights, sir, not on construction services.
Sir, on the development right, now the High Court had upheld saying that the development right levy is valid. Okay. The point that now you need to look into is this is applicable for redevelopment? Answer is yes. Because in case of redevelopment, there are 2 likely possible, and most likely is the whole of the building is demolished and complete development happens.
Right.
Least likely is the extension, if everything is base is good, extension of additional floor. Generally, extension of additional floor will be undertaken as a works contract, not as the redevelopment.
True.
Now, here I would say the redevelopment, when you are doing the planning, you should consider that the development right is passed on by society, because all the members of the society are conveying you the right for you to develop further. So development right is passed on by the society, and you as a builder will have to still pay under reverse charge.
I see. The onus is on the builder then.
Yes.
And it is at 18%, sir? This would be at 18%?
Simple answer is 18%, but when you put it on paper, there's a whole math to it, sir.
Okay.
There's a lot of math to it. 18% on the residential to commercial split, and if everything is residential, split between unsold, sold, there's a math to it.
Okay. So I will come back to you with a specific query, sir.
Yeah.
If the email ID can be given, I can just write an email to you and the mobile number.
Surely. Vishwas will get in touch with you, sir.
Definitely, sir.
Yeah.
Yeah.
Thank you, Venugopal.
Thank you, sir. Thank you, Mitesh, sir.
Any other questions?
No, that's all.
Yes.
Thank you, Vishwas.
Thank you, sir. I thank
Rajesh,
all
sir,
the
thank you, sir.
speakers. I thank all the speakers for giving us their valuable time and educating us on RERA consultant, like our today's program analysis of Delhi High Court judgment, RECKITT, BENCKISER, and others versus UOI. And also thank for the participants today's for patiently participating in the session. Hope the session was informative and knowledgeable. If you have any queries, please do contact us. We always help you. And one more thing, I want to share that today's and share it, ma'am. Yes. I think today that lastly, I wish to share all that we are having coming up with two stalls on the 1st and 2nd and 3rd of March 2024 at BIEC, Bangalore International Exhibition Center and KSCAA. Request you to all come and visit and support us. We will be always available with RERA experts to clarify or answers anything on RERA. Thank you very much. Thank you, everyone and all. Have a great day.
Thank you so
Thank you,
much.
sir.
Thank you. Thank you.
Thank you all.
Share ಆಗಿತ್ತಮ್ಮ?